please keep 30 minutes and then we will go for lunch.
Thank you, Alex, for giving me the opportunity to present here. Thank you for staying. I have a tough job, last presentation before lunch, so I stick to what a boss of mine used to say. Mach's Maul auf, tritt frisch auf, hör bald auf. Sorry for the English speakers. So we've heard a lot today about producing more energy and the need to produce more resources and energy. We're benefiting from the same drivers, mainly higher prices. Higher prices mean saving energy has also increased in value, and that's what we're doing. And gonna show you a few slides. How can we do it? Why it makes sense to do it? And then a few examples. So let's start with how we can do it. Of course, we start with the chart where is energy used, and actually the split is fairly similar between developing markets as well as developed markets. So it's roughly a third in the building, heating, cooling mainly, a bit of other things, light, elevators, whatever. Then about a third in transport. Transport on the street is the main consumer there, air, water, rail, and so on. And then manufacturing, a bit less than a third. We've heard the industries that consume a lot of energy this morning, so steel, cement, chemical industry consumes a lot. So that's where the energy is used, and of course that's then the space where energy can be saved. There's two fundamental ways to save. Either we change our lifestyle, go back to Stone Age. Some of you may remember the Flintstones. But we all got used to some comfort. It's better to live in a house, very climatized, better than living in the forest in a hut. We appreciate other comfort, good cars, whatever. So we think technology innovation, that's going to be the solution, and that leads to the energy transition. I mentioned building, industry, and transport. That's where the energy is used. I'm going to mention one example for each sector. In the building, one easy way to save energy is a heat pump. Now in Switzerland, most people are familiar with the heat pumps. Market penetration of heating systems sold in Switzerland is 70%, and that includes renovation. We will get new laws, so that share will increase even, but it shows that we didn't need regulation to bring it up to 70%. It does make sense financially to use a heat pump. Savings or efficiency is between 3 and 5 times, so I put in 1 unit of energy, I get out 3 units of energy, and one additional advantage is that I can use the same heat pump that heats the house in the winter. I can use the same heat pump to cool the house in the summer. Just turn the switch and the liquidity goes the other way around. Other areas in the building, engineering, smart material installation. Now moving on to industry, one example in industry is electrification. My brother used to work at ABB. He sold drives there. Now I asked him, well, what is a drive? What does a drive do? So turning time 40 years back, most applications in industry were run by engines, motors. And with motors, you have different gears, different speeds. We have 100 rounds per minute, 200 rounds per minute. If you need for a certain application something in between, 140 rounds per minute, whatever, you run the engine at 200 rounds per minute, and then you push the brake and bring it down to 140. Evidently not very efficient. Now with electric variable drives, with electricity, you're much more variable, so you can exactly run the machine exactly at the speed you need. So 140, you save 30% energy, no loss of comfort, whatever. Other applications, Industry 4.0, smart grids, and so on. Then turning on to transport, we've heard a lot about EVs already this morning, batteries. One example here is weight reduction, and that's the case for combustion cars as well as for electric vehicles. We have a good example here in Switzerland, EMS Group. They do plastics, they replace parts in the car, metal parts, replace them by plastics. About 1/3 of the weight, same characteristics, same performance, so heat resistance, stiffness, and so on. And every gram or every kilogram in the car is worth something. And that's the reason why, as an automotive company, EMS Group has an operating margins of 25%. That's pretty impressive for an automotive company. And now I have here a fourth pillar, and the fourth pillar, now so far these three sectors, that's mostly low tech. It's technology, it's existing technology, no rocket science. And then like a bracket above all these applications is IT software. For many applications, for most applications, I need technology, and that's a bit more high tech. So sensors, for example, belongs into this part. This room, for example, now we have the window open, and that makes sense. It's 20 degrees outside, so very, very nice. But we can't do this in winter or in summer. So it's an old house, we don't have it here, but in a modern building there would be a sensor, CO2 sensor. If 100 people are in here, the AC needs to blow in more fresh air. When we're out, we don't need fresh air. So we need a sensor, that's a semiconductor. The sensor provides data, a lot of data, so we need some kind of software. Today it would be called artificial intelligence. And then some smart process, and then we have an advisor who opens the door or closes the door to push in fresh air. So overall, IT software is becoming more important. That's a bit more the tech part. Why it makes sense? Well, we heard a lot about this morning. There are three drivers: energy costs, so economics, of course, is the most important one. Security of supply has increased in significance recently, and climate change as a third driver. Oil price, we've seen already and heard a lot about it. The message here is it used to be at around $20 per barrel before. Volatility has significantly increased. Seems like the level will be higher going forward. Even there may be spikes below, but there's a good chance, and from what I heard this morning, 80 is probably too low. Medium term as an oil price. And again, with higher costs, it does make sense to save energy economically. Electricity price is becoming more important, and of course, electrification is a trend in the world, so more electricity is consumed, and the chart here only goes from 2020 till today. The message here is we used to have an electricity price of 30-40 euro per megawatt hour for several years. Now with the war in Ukraine, price has spiked. It has come off quite a bit, but still the current power price is at around 100 euro per megawatt hour. So it's still 2 to 3 times the price it was only 3 years ago. So again, it does make sense economically to save energy. And last week, I think the power prices in Switzerland were in the paper, and a big article in Blick as well. On average, power prices goes up 20% next year. Now, a little anecdote. When we started doing this about 20 years ago, we asked people, what is your electricity bill? How much you pay for electricity? And hardly anyone had an answer because it was so cheap. 90% of the people we asked didn't know what their bill is. If we ask today, it has changed a bit. At least 50% of the people know what they pay for electricity. It's much more higher, and of course that's the first step to save energy, when you know what you pay, and then you start to think, where can I save? Not too many numbers in the presentation. I'm glad we didn't coordinate with Carlos, but I'm glad the number matches. 100 million barrels per day, 365 days, 80 I used here today. Price is higher. The world today spends 3,000 billion on oil. To give a relation, the GDP of Switzerland is roughly 800 billion, so 4 times the GDP of Switzerland is spent on oil per year with a price of 80. But that's of course not the only expenditure on fossil fuels. We have gas, we have coal, so total sum is 6,000 billion, so almost 8 times GDP of Switzerland. So if we can save 10%, that's not a too aggressive target. That's 600 billion US dollars, so roughly the GDP of Switzerland. That's just to give you an order of magnitude that it may make sense economically to save energy. Security of supply, it was not a nice position for Europe, Germany especially, to be dependent on Russian gas. They tried to replace Russian gas with gas from Qatar. Not a lot better. The US stepped in, probably a little bit better, but as we found out, that's an expensive replacement. So good business case for the US. Climate change as a third driver of saving energy. We've had droughts early summer, we've had floods late summer. Of course, there's the personal damage, even death counts. The economic consequence probably is that insurance premiums are going up. Asking around in the agricultural industry, premiums go up. The price for insuring buildings, of course, goes up. So it does have an economic consequence as well. Now, a few examples. I mentioned a few companies just quickly. I mentioned heat pumps. NIBE is a Swedish company, market leader in the heat pumps. Some of you may remember Schulthess in Switzerland that was taken over by NIBE. Growth company. Suffered a bit from higher interest rates, of course, as many quality companies, still trading at 30 times earnings. Now I mentioned Switzerland has a penetration of 70% with heat pumps. Sweden or Scandinavia is at a similar level, so no surprise that good companies developed in Scandinavia and in Switzerland. Germany, that is supposedly a leader in energy transition, has a penetration of 10%. France, Italy, similar level. UK probably even lower. UK used to have cheap energy for a long time. So the market in Germany can double again, and then maybe double again, and then we're getting closer to saturation. Just to show you, Switzerland, we think, well, heat pumps, that's a story that's from the past, but we're not at the very beginning, but we're at an early stage of this process. Another example in industry, Schneider, most of you know the company. ABB is a bit closer here in Switzerland. Leader in automation of industrial processes, and of course a leader in data centers to reduce the energy consumption in data centers. Big cap, close to 100 million market cap. We prefer it to ABB because they've been earlier in moving their portfolio towards energy efficiency. They acquired a couple of software companies 5-7 years ago, so they're benefiting now from this early transition to saving energy. Another example that's in the transport industry, LEM, Swiss company. 2.5 billion market cap, based in Geneva. LEM is a market leader in measuring tools for electricity, so they measure electric currents, small devices between 1 and 5 euros mostly. Combustion car has a few of these measurement tools per car. An EV has 20 or 30, that's probably the range, and that's the market growth for LEM, their market leader in this market, and the driver is the increased penetration of electric vehicles. 30 times earnings, not cheap. Cash conversion close to 100%, so they're growing high single, low double digit, and are able to pay out basically almost 100% of their earnings, so dividend yields of close to 3% plus double digit growth. And then a fourth example for the IT sector, Infineon, also a big company, partially exposed to consumer electronics that is not running so well, and that's the reason why the stock is cheap. But more than 50% of their portfolio goes into energy efficient applications like power electronics. Power electronics you use, that's a semiconductor, you use to convert AC to DC and the other way around. Remember, the car battery is DC. You need to convert into AC to use it for the car. PV equipment produces DC, needs to be converted into AC. When it goes into the battery, it needs to be converted into DC again. If you use it, it needs to be converted into AC again. So, and that's a growth market for sure, with increased application of renewable energy and with more electric vehicles. But the stock is punished from the semiconductor cycle. That's a few examples of companies, and then, of course, if you don't want to go for in single stocks, there's a good solution that keeps your job much more easy. That's a fund, Carnot Efficient Energy. We're doing this for almost 20 years by now. The fund is a bit cyclical. Everything you do to save energy means I have to invest today, and then I get the benefit, of course, through lower operating costs for the next 20 years. And that means we have our beta is not 2 times something as we saw for the resources fund, but it's slightly higher than for the market. Long term, it's a European portfolio, so benchmark here is stocks 600. And a few financial measures, and the most important here is the dark bar. That is the earnings per fund share. Minus 8% in 2020, plus 40% in the recovery after COVID, plus 20% in 22, and plus 7% this year, so steady growth. Driver is the structural growth of the sectors we invest in. Gray bar is the margins, 14, 15, 16%, good quality companies, good margins, and current PE 18.9 times, that's not cheap. It's a quality portfolio, growth portfolio, so you get 2.5% cash yield, dividend yield, and high single-digit earnings growth. So that's it. I promised short presentation, so this is it.